So when it comes to long-term investing, diversity is definitely the key. All right. So this means investing in a variety of stocks across all the sectors, as many sectors as the different sectors that are out there, because, hey, there are 11 sectors. Now, knowing that there are 11 sectors out there that you could, possibly tap into to build your generational wealth, to build that wealth-driven portfolio, you got to do what we always talk about doing. You got to research. Research is the key to everything. Everything that we talk about has to deal with research, okay? So you have to understand that. In order for you to tap in, get into some of these sectors, you got to know what these sectors are. We'll talk about that in another video, but we're going to continue on because it's just what you got to do. All right, so to reduce your risk overall, tapping into these sectors will make it a whole lot simpler. It simplifies the process, okay? So by simplifying the process, it makes it easier. It eases the pain. And as a minority investor, it took me a while to understand that. But you have to be able to ease the pain. You have to be able to understand. This is a long-term deal. We're not in it for the short haul. We're in it to have these long-term gains, all right? So you got to be careful. You got to be smart, and you got to be strategic when it comes to that. You're going to hear me say that a lot throughout this video. The one thing you have to understand that it's important to choose stocks that have a proven track record. So how do you find out about these stocks with this proven track record? Guess what you got to do? Again, you have to research, all right? Researching to find out if a stock is a blue chip stock, small cap stock, mediocre stock. It doesn't make a difference. You need to tap in to find out. And just a quick tidbit, I'm going to say this throughout a lot of videos. When you tapping in to do this research, Wikipedia is my friend. Yahoo Finance is my friend. Google Finance is my friend. TradingView, Thinkorswim, all of these are my friends. But I use Wikipedia. I go to Yahoo Finance to find out the fundamentals. And then I use TradingView to do my technical stuff. Technical analysis, charting, and all of that. You got to be able to do all of that, okay? So we're talking about growth and stability. So we don't want to just throw our eggs in a basket of just one particular stock. So when we talk about diversity, we're talking about, okay, let's use an example. All right. When we're being diverse, you have to understand this. It's like you might want to get dressed up, but only thing you have in your closet as dress shoes is Nikes. Okay, and it might be a bad or a cliche to that, but if you don't have what you call a variety, put it this way, you might want to get dressed up and all you have is a bunch of blue button-down shirts. You don't have a shirt to match this. Everything is bland. Now you put yourself in a situation to where you don't want to be in a situation to where the stock market can go up, the stock market can go down. And if it does, and you only have one particular stock, then guess what? You're going to win or you're going to lose with just that one particular stock. And you don't want to have so many stocks in the same sector. So, like, let's say you buy Nike, you got 100 shares of Nike. You don't want to have 100 shares of Under Armour. You don't want to have 100 shares of Adidas, okay? You want to be spread out. So you might have 50 shares of Nike and then turn around and you might go buy 30 shares of Coca-Cola, and you might go over here and buy 20 shares of Waste Management, and then you might go down here and buy 50 shares of PayPal. As you can see, we're diversified because you have a consumer good, you have a beverage good, you have a technology stock, and the list keeps going on and on and on. Now, by choosing the right stocks, you're going to diversify your portfolio. But how do you do that? How do you choose those particular stocks? One strategy is to focus on the companies. A lot of people would tell you not to focus on the companies you know, but in order for you to get into the market, you need to focus on companies that you know. So if you know Coca-Cola, research Coca-Cola, invest in Coca-Cola. You might like Pepsi better than you like Coca-Cola. Okay? You have to research and get into all of these different stocks that you feel comfortable doing. Don't go buy Beyond Food and you don't know nothing about Beyond Food. And I'm not putting no knock on Beyond Food, because I swear, when we had the EDC investment group, where we was trying to build generational wealth a few years ago, one of the members had come and was like, hey man, we need to invest in Beyond Food, and we didn't. When he first brought it to us, Beyond Food was probably like $4 or $5. Beyond Food, when the pandemic hit, shot up to $200. If we had to purchase 300-400 shares because it was, 13 of us, we'd have been sitting pretty right now. But we didn't know nothing about it, and none of us was eating plant-based, food. So, we didn't fool with it. We didn't do our research. Okay, so you got to make sure that they have strong fundamentals. When you're looking at their fundamentals, you got to look at their balance sheets, income statement, and their cash flow. If they got more money than they got debt, listen to me. If they have more money on hand than they have with their debt, that's a company that you want to deal with, because that means they can pay their bills over time and not have to worry. All right. So you want to look at that. And we'll listen, everything that we talk about, we will do a video on, basically to tap into the fact of how do you read and understand the fundamentals, the technical analysis, the fundamental analysis. The fundamentals is understanding the cash flow, understanding the balance sheets, understanding the income statements. Okay. So that's what you got to look at. The history of earnings and growth. If a company is growing, as T.I. would say, expeditiously, meaning that every year that company rises and rises and rises, and you don't see no drop off, that's a blessing it's a blessing in its own. So you want to look for companies like that. You want to make sure that this company is going to grow. Again, all of this plays into, hey, the balance sheet looks good, the income statement looks good, the cash flow looks good, and they are steady growing every single year. All right, every single year, the earnings is top notch. And listen, you don't hear about no layoffs. Those are companies that you want to invest in. So you have to understand. You need to know balance sheets, cash flow, income statement, growth earnings. All right. So that gives them a competitive edge across the industry, man. That's exactly what it does. It just gives them a competitive edge. Another way to invest, man, is invest in index funds and ETFs. ETFs are exchange trading funds. That's the new wave. Index funds is they're complex, but they're not complex. ETFs are easier to get into, but ETFs can be tricky because some ETFs you have to pay a fee. And then when you're talking about ETFs, let's take for instance, you might have want to buy shares of Apple, and everybody uses Apple because Apple is one of the top technical stocks in the world. But at the time Apple was trading at $200 or $300, you might not have $2,000 to buy 10 shares. You get an ETF, and the ETF, which is the exchange trading fund, might have some Apple in there, some Google. They're sectored off. All right. So there are sectors within inside of that. You're looking at the holdings, and the holdings are basically each company that's with this side of this ETF. ETF is like a hedge fund. It's not a hedge fund, but it's like one. It's started. They're holding these particular stocks, and with these particular stocks inside of her, it might be anywhere from 10 to 20 to 30. It doesn't make a difference. They're inside of this one particular, and you get it for a discount price. You might be able to get Apple, Google, and all of them, all your major ones for about $50 a share, when in reality, you go buy one of those for $50 a share. All right. So those are just some of the things that you got to do. Now, once you've built your portfolio, it's important to manage it carefully. You have to check on it twice a week, at least that minimum, twice a week. You have to check on it. You can't just think that it's there, because some of these portfolios will have dividends. Some of these portfolios will rise. Some of them will fall. You have to check on it, man. You know, it's just because you have it doesn't mean that it cannot be a disaster. All right. The biggest mistake I ever made in life was not watching the people watching my 401k. 2008, when everything crashed, I wasn't paying attention, lost a ton of money. Matter of fact, I went from almost 100,000 down to maybe a little more. The numbers went from 100,000 down to 1,000. That's a heck of a downfall. So you have to pay attention. You have to manage your portfolio. It could be stuff in there, you move it around, whatever you want to do, but you have to just manage it. All right. You can't just sit there. You can't just let it grow and not be checking on it, because it could get to a point where those value stocks could turn into growth stocks, so you can still make money off both ends. Okay. So, you got to regularly view your holdings, rebalancing your portfolio to maintain your desired asset allocations and avoid emotional reactions to the market volatility. What that means is, man, the market, you can't be in the stock market if you're playing in your feelings. But we have to get you to understand that. So that's where the financial literacy comes from. And listen, it's looking like us, but we gotta be patient, man. You got to have patience in this thing. All right. Now follow these key principles. I'm telling you right now, you follow these key principles, you'll learn to stock portfolio. You can build a portfolio that provides you with a steady growth income over time. Like you can literally, over time, you could get to a point where if you're doing it right, you can retire and live off of your portfolio. But you got to be smart. You got to be patient. You got to be strategic. You got to be careful. All right. So why does the stock market matter? It matters because it's a proven strategy to build wealth and achieve financial freedom. That's what we want. Ain't that what we're here for? Financial freedom. Yeah, that's what we're here for. So did you know that Warren Buffett, Mr. Buffett is one of the world's best and most successful traders, investors of all time. He's made a fortune on long-term stocks. But he has the money to go out and buy 3, 4, 5, 600 shares of certain stocks and get that dividend and get that money back. But he's got patience. He's got discipline. Those are key things, man. Those are another part of it. Patience and discipline. You got to be patient and you got to be disciplined. You can't just jump in here and be like, all right, so I'm going to buy this, but it's not looking right. Listen. I'm going to put my money where I know that it can go up and down. But I'm also understand this. I'm in it for the long haul. All right? This ain't the short game. It's the long haul. So, with that being said, remember, investing in your long-term future. All right? Investing in your long-term future is not a get-rich-quick scheme. First of all, I'm not a financial advisor. I'm a person who lost a ton of money in 2008, decided to learn the stock market. Now I decide I want to help the people who look like me. And it's just not about color. It's the people who are rocking work gear. It's the people who are sporting hoodies. It's the people who are rocking beanies. We're not in these suit and ties. All right? We're not sitting behind these corporate desks. We still want that money, but we want to do it our way. All right? So, with that being said, don't be emotional. Be disciplined, be strategic, be careful, grow your portfolio so you can have that generational wealth and you can have that time to where, when you in your mid to late 50s, you can travel the world and don't have to worry about nothing. You get your retirement, travel the world, don't have to worry about nothing. All right. Now, before we go, I need you to do me a favor. Subscribe to the channel because you're going to get more videos just like this one. You're going to get all of it. All right. It's coming. It's coming. We just want to get the financial literacy part down. We want to educate you. We want you to understand what you're dealing with. We want you to understand ETFs, options, Forex trading, common stocks. We want you to understand how to get in and how to get out. We want you to be able to do all of that. All right. It's your man Tone over here with Every Dollar Counts Invest. Traders, let's see. I'm going to see y'all, man, when we start trading. It's Wednesday, hump day. Trade on, players. Trade on. Peace.